The Breakdown of a Relationship. Reflections on the Crisis by Screamin Alice. Originally published October 2008. This text from endnotes.org.uk. The history of the capitalist mode of production is punctuated by crises. One could say that crisis is the modus operandi of capital, or of the capital-labor relation. This is true insofar as capital, the self-valorization of value, the self-expansion of abstract wealth, is at any given time a claim on future surplus value extraction. The accumulation of capital today is a bet on tomorrow's exploitation of the proletariat. The crisis today has taken the form of a financial crisis, while the prospect of a full-blown economic crisis looms ever larger. These two crises do not merely stand in a relation of cause and effect, however, whichever way one were to posit the relation. Rather, they are the different manifestations of the same underlying crisis, the crisis of accumulation of capital, which is at the same time the crisis in the relation of exploitation between capital and proletariat. Finance capital is a form of capital which most closely corresponds to its pure concept, in that the plethora of Byzantine forms of finance capital can be reduced to the process whereby money begets more money, or value begets more value. The relation between finance capital and productive capital, or between finance and the real economy, is marked, on the one hand, by the discipline which finance capital imposes on productive capital, and on the other, by the possibility, and indeed tendency, for finance capital to run away with itself, to run too far ahead of the possibilities of valorization which are ultimately given by the profitable exploitation of labor power and production. This relation between finance and productive capital, or between finance and the real economy, while it has always existed in some form in the capitalist mode of production, has not remained unaltered. Since the global crisis of profitability of capital, or, looked at another way, since the crisis in the capitalist class relation in the late 60s and early 70s, marked by a wave of class struggle, industrial and social unrest, financialization has been an integral element of the capitalist restructuring and counteroffensive, i.e. the global restructuring the relation between capital and proletariat. On the one hand, financialization has been a vehicle by which the exploitation of labor power has been integrated on a global scale, with the emergence and integration into the world economy of new poles of accumulation in the emerging BRICS economies, Brazil, Russia, India, China, South Africa, etc. On the other hand, it has been a means by which the entrenched position of the high-wage proletariat in the advanced capitalist economies could be weakened. These two aspects of financialization together correspond to the integration of the circuit of reproduction of labor power with the circuit of reproduction of capital. With the increasing financialization of the relation between capital and proletariat, workers' wages in the advanced economies have stagnated, and the reproduction of their labor power has been increasingly mediated through finance. Mortgages, loans, credit cards, and the investment of pension funds in the stock and money markets. This new configuration of the class relation has offered to many, but not all, strata of the proletariat in the advanced economies rising living standards tied to asset price inflation. The capitalist counterattack and restructuring has involved fundamental alterations in the class relation through the defeat of the old workers' movement and the obsolescence of its institutions, trade unions and parties, which promoted the rising power of the proletariat within capitalist society. The new shape of the class relation and the financialization of this relation depend ultimately on the ability of capital to extract sufficient surplus value in the global economy by increasing productivity and by the intensification of labor. The present financial crisis has its roots partly in the subprime loans and mortgages, which were predicated on the continual upward trend of the housing market and the inflation of asset prices after the collapse of the previous asset bubble, the dot-com boom. The vast amounts of fictitious capital being generated by the leveraging practiced by financial institutions, banks, investment funds, private equity funds, etc. The finance-led boom ultimately outran the ability of the real economy, i.e. productive capital, to extract surplus value through the exploitation of workers and production, whether this production is material or immaterial. As a consequence, we are witnessing a massive correction. The falling stock markets, housing market, in Marxian terms, the devalorization of capital, expressed in write-downs, defaults, bankruptcies, mergers, and fire sales of financial institutions, and now their part nationalization by capitalist states across the board. Thus, the pre-existing tendency towards the overaccumulation of capital, whether this tendency is to be understood as cyclical or secular, such that the productive investment of capital can no longer meet its valorization requirements, is exacerbated by finance capital's penchant for generating fictitious capital through leveraging, debt financing, futures, options, derivatives, and an increasing plethora of complex and arcane financial instruments. Even though finance capital disciplines productive capital, and productive capital is increasingly financialized, the extraction of surplus value through the exploitation of the proletariat cannot keep pace with the demands for valorization which are made by finance capital. Capital is in crisis. The crisis asserts itself as devalorization. Devalorization is the only way that capital can lay, for itself, the basis of a new round of accumulation, and involves the disciplining of the working class to accept new terms of exploitation. However, this means that it also places the very reproduction of the capital-labor relation at stake. To avert the crisis, the nationalization of the banks is not sufficient. The economy is facing recession or depression, and the specter of deflation. The state managers of capital are caught in a double bind, with huge budget deficits increased by the financing of the bailout of the financial system through the purchase of toxic securities, the recapitalization of banks, and the guaranteeing of new loans. The deficit spending that capitalist states will need to engage in to maintain levels of effective demand in the economy will be increasingly difficult to finance. The question of the creditworthiness of banks now asserts itself at a higher level as the dubious creditworthiness of capitalist states, central banks, and state treasuries. Capital might find a way out of the crisis. It will seek to maintain or increase profitability in the real economy through pressure on wages, although this will perversely have a deflationary effect, and the intensification of labor, the increased exploitation of workers, i.e. strategies to increase both relative and absolute surplus value. The way out of the financial and economic crisis involves the intensification of exploitation on a planetary scale and a crisis of the relation between capital and proletariat. In the 19th and 20th centuries, up to the capitalist restructuring in the 1970s and 1980s, the proletariat could assert itself as a positive pole in the relation of exploitation. Now, as the reproduction of the proletariat is increasingly mediated through finance, and is thus immediately entwined with the reproduction of capital, with the effect that the reproduction of a growing swathe of the proletariat is increasingly precarious, as shown by the current waves of foreclosures and repossessions. And financialization enables the integration of the capitalist exploitation of labor power on a planetary scale, the very means which, on one level, enable capital to fight its way out of the crisis, threaten crisis on a higher level, the level of the reproduction of the class relation itself.